All right, welcome to session 3. In this session, we are going to be going over support and resistance part 2. So we're going to start going over top-down analysis, and that is going to kind of transition right into moving averages. And then at the end of this course, we're going to be taking a look at how we can find confluence between moving averages, support and resistance levels, and market cipher B, and kind of tie it all together so that we can find some really good entries into trades. So to start off, let's talk about top-down analysis. I know I already touched on this a little bit in the previous session where we talked about support and resistance. So basically, guys, top-down analysis is where you analyze a chart looking at the higher time frame first, and this will allow you to get a clear view of the overall market structure. After the larger time frame and the larger trend and the structure of the market has been established on the larger time frames, then we're going to zoom into the smaller time frames and we're going to take note of other details, and that will help us to actually enter and exit our trades. So top-down analysis basically is where we're going to draw support and resistance lines starting from, I like to start from the daily. A lot of people will start from the weekly. And what you're going to do is when you first open up your chart, I actually do recommend you start with the weekly. You're going to look to the left. You're going to open up your chart and you are going to be looking over here in the left section. And this is where you are going to find places where the price has touched often, and this is where you're going to draw your support and resistance lines. Now, it's very important when we're doing top-down analysis that we color code everything according to the time frame, or at least assign notes to the trend line. So if I'm going to draw weekly support and resistance lines, I will make these things, just for example's sake right here, I will make them, I'm just going to use letters. I'm going to use letters. I'm going to use W for the weekly, and I'm going to draw my weekly support and resistance lines in here. Okay? And what I want you guys to do, especially if you're new, I want you to actually take the time to open up various charts and do this top-down analysis. Do it yourself, because the more you do it, the easier it will be for your eye to spot levels. Now again, the way we're spotting the levels is we're looking for areas where price has found a sticking point, and on the weekly time frame, like right here in this area, we can clearly see that we had 1, 2, 3, 4, 5, 6 weeks in a row of price action using this line right here as kind of a support, right? We're looking in the past and finding places where price has had a lot of significant, I don't want to say movement, but where price has touched that area many times in the past. And so I'm just going to draw my levels right here. And of course, we're always going to do our high. That's always going to be the highest level of resistance right there. Then I guess we could do another one right here as well, because it's resistance, support, support. So these are all weekly levels, and we can delete some of these as we get deeper into our analysis, but the reason I'm putting so many on the chart right now is just so that you guys can thoroughly understand what we're doing. And again, as we're adding these support and resistance levels, the weekly levels are going to be the most significant, okay? Right now, we are coming up to a weekly resistance, which is also an all-time high. But this is going to be a very, very, very significant level, because for 2 weeks in the past, this was acting as resistance. And so, when we come back up to this resistance, it's so significant because we have 14 whole days in the past where this was our resistance. So the more time price spends on a certain level, the more significant that level becomes, which is why when we're looking at candlesticks where each candlestick is a whole week's worth of price action, it makes the level more significant. Then we'll go down to the daily level. And on the daily level, we'll kind of see if we can find any more areas that we don't already have on our weekly level. Now, a lot of times you're going to find that you don't have to draw a lot of lines on these lower time frames. I see one right here. I would mark for a daily level. I'll change the color. I'll make it orange, but then I'll also put a D here for the daily level. And let's see if we see any more daily levels. I don't really see any more maybe I would actually, yeah, I would put one right here. I would put one right here. I would put one right here because it was resistance, support, support, resistance, support. And right here again, it was resistance, support, 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 resistance, 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 support, support. So these are our daily and weekly levels. And again, when we're actually zooming into the lower time frames, these daily and weekly levels are going to be the ones that we are really going to look for a bounce off of if we're coming down, or we're going to look to see if there's momentum to burst through that if we are actually on the way up. So right now, just looking at this daily time frame, I can see that Market Cipher B is telling me that we are in a trend of upward momentum. So I can kind of expect that we might break through this resistance and hit a new all-time high. Now, if Market Cipher B was telling me that we're printing a red dot right here, and I could see that these waves were kind of crossing into themselves. Let me show you what I mean here. If this wave right here was looking more like this, where I can see that the light blue gray wave is crossing behind the dark blue wave, then I would know for certain that we're not going to break out of this resistance level, because in the past we can see what happened. We had a green candle, it came all the way up to this exact level, but what was happening with Market Cipher B? It was telling us that momentum is running out, we're about to start heading down, and that's exactly what happened. Right now, we are forming a green candle, very much the same size candle, right, as we did before. However, this time we can tell that this dark blue wave is very far away from crossing behind. I'm sorry, the light blue gray wave has much more time before it's going to cross behind this blue wave. So, we can kind of expect us to break through this weekly resistance level. Okay, so then what we're going to do is I like to go down after the weekly and the daily. I like to go down to the 4 hour and the 4 hour. And just draw some more levels. Again, start to the left. Always look to the left first. We're tempted when we're drawing these levels to look over here, and your eye will be drawn right to here, and you might want to draw this level here. But come over to the left and line up. Like, for example, I can see, right here, kind of, that this area was acting as support. So I'm going to draw a line there. Oops. Sorry about that, guys. I'm going to draw a support line right here. And look, it lines up perfectly with our support over here, but it's more accurate now because we started over on the left. That will make sure our levels are more accurate. I'm going to go ahead and make this a different color for the 4 hour. I'm going to go ahead and make it blue. I'm also going to put 4 here so that we know this is the 4 hour. And let's see if I can find any other levels. I would put one right here as well, simply because, yeah, I would put one here because we have it acting as support right here and support right here and resistance and support right here. And we can look to the right also, guys. Like, we want to look as far left as possible and find good levels. And once we mark that line, if we find that over on the right of the chart, that level has been tested again, then we know, okay, this is a good level and it's going to be trustworthy for my analysis. Now, for me, the lowest I go down if I'm trading on the larger time frames is the 24 minute, and I will draw levels on the 24 minutes. So again, you don't have to zoom out too much. The more you zoom in, the more you can just deal with the local price action. The more you can just deal with the here and now, because we're trading in the here and now. But these daily and weekly levels are gonna show us, they're gonna show us basically the most significant levels. Like right now, obviously, we're trying to break out of this all-time high, and we're having obviously we're having a reaction here. We're having a reaction at this level. We're having a reaction here. So the 24 minute, I would draw a level right here. Because, and I'll change this color as well so that we know it's the 24 minute. Make it purple. I would draw in here because this was acting as resistance and then support and then resistance and then resistance and then resistance again and then resistance, and then it got flipped to support, and then it was support with all these doji candles here. So yeah, I would consider that a significant level. I would consider this also a significant level on the 24-minute right here, because this was a huge resistance that we couldn't break through for a long time, and then it was resistance again earlier today. I think that was today, yep. Earlier this morning, that was resistance again, before that little dump we had. And now it looks like it might be acting as a support. Let's see what happens when this red candlestick comes down, if we're going to test this support right here. That would be a nice little live demonstration. Now, yeah, so this is how you're going to do your top-down analysis, guys. And just so you guys are aware, I know that for some people this can be quite repetitive and boring, but I think it's really, really important for us to get this stuff down, to get it down, because this is going to be the foundation for everything else that we do. If we can get these levels of support and resistance down pat, right, we are going to find ourselves able to find really good entries into trades. So I'm going to go through one more example, and I'm going to go much quicker, but let's do another chart. Okay? We're going to do one more chart. Let's do something very different. Let's do why don't we do Cardano? We'll do ADA USD, and we'll do Binance. Okay, we'll do ADA USD. We'll start in the week. Zoom out here. And this is a funny chart. But yeah, a lot of times these are the kind of charts we're going to have when we're trading these altcoins, right? So this is the weekly level. So we're going to put in our weekly. Let me change the color here. For our weekly levels, put one there. Start on the left. So put one right here. I would put one here. Definitely put one right here. And then one right here. The reason for this one here is because it was a resistance, then it was a support, then it was a support again. Okay, and this one right here, because it was a resistance, then we flipped it into support. Then we'll go down to our daily time frame. Oh, and of course we put one at our all-time high as well. Go down to the daily time frame. Start over to the left. It's very obvious that we have one right here. Let me change the color to orange. And definitely I would say we have one right here because it was resistance, support, and then we had this wick down to support again. I would say that this one right here, because it wicked up to resistance multiple days in a row. And I would even put a level right here as a daily level, because these are where the candles closed and opened. So when you're drawing these lines, you know, it's kind of subjective. Some people, I like to really put the lines where the bodies of the candles are clearly opening and closing. However, it's okay to put a line if you see that candles are wicking up to the same place multiple days in a row. And like I said, it is kind of subjective. When we get into the Fibonacci retracement tool, then we're going to actually have more confluence. We're going to have more assurance that our support and resistance lines are right, because a lot of times when we use the Fibonacci retracement tool, it will draw lines of support and resistance for us in key areas, and it will just confirm that the lines that we drew with our eyes are correct. So that's kind of all I see for the daily. Let's go down to the 4 hour and see if we can see. Let's see if we can see anything else. Now, definitely, I would put one right here for sure. Change the color to purple. I definitely see one there. And that's kind of the only 4 hour I really see, to be honest with you. Possibly maybe this right here I would put as a level, because it was resistance, support, then resistance, and then support, and then resistance. So here we are. We find ourselves consolidating on a weekly support. And this is where, if we zoom in even more, we can make even more, types of trades here. Here's what I see when I look at Cardano. If we go on to the 4-hour, I can see something very interesting. If we're looking at market cipher, we can see a very clear direction here where things are moving upward. We can also see that we're coming down on the 4-hour and we're just wick, right? We're wicking a lot at this level, which shows to me that, price obviously has been consolidating since, last week, March 4th. Price has been consolidating right on this weekly level. It looks like we formed a bottom on this weekly level. Market Cipher is telling us that we formed a bottom on this weekly level. So if you were trading Cardano, if you were investing in Cardano, this would be a good time to start accumulating Cardano because we formed a bottom, and now we can clearly see Market Cipher curving upwards, right? Now, obviously, there's some time left. We can see that the money flow has come down, and it looks like there's going to be some time before money flow curves back up again. But perhaps later on this week or next week, March 15th, around that time, we might actually see a huge move up from this level when money flow crosses over. And what we're looking for is basically Market Cipher to show us that momentum is about to move in our favor. And what we're looking for is an anchor wave right here. This is called an anchor wave, where it forms a really deep wave underneath this white line right here. And we're going to spend 3 sessions just on Market Cipher, but I'm going to be saying these things now, and if you're lost, just listen to what I'm saying. I guarantee it'll be like puzzle pieces that all snap together at one point. We have an anchor wave here, then we start forming trigger waves that are higher than the anchor wave, and it looks like we're going to form another one right here. And what we're looking for on Market Cipher B is we're looking for the shape of it to change, right? We're looking for it to start out high, it comes down low, and then we're looking for it to come back up high again. And when it comes back up high again, the price is going to just follow right along with that. Right along with that. And we can see it on the bottom end too. Look, if we draw like right here, then we can see we're coming back up. Now again, it doesn't have to be perfect when you draw on Market Cipher, but the general direction of Market Cipher B is telling us that we're about to come back up. So why am I going through all this with Market Cipher B? It's because we have come down to this very significant weekly level on Cardano, this very significant level. And we know when we do our top-down analysis that when price comes to a weekly level, we are looking for a reaction. We are looking for something to happen so that we can capitalize on this price action. We can capitalize on the movement of price. And so what we're going to do is then, how are we going to know what's going to happen at this weekly level? Well, we come down and look at our indicator on Market Cipher, and that will tell us what is happening with the momentum, with the money coming into the asset Cardano. So this is how we're going to do our top-down analysis, guys, and this is kind of how we're going to look for good places to enter trades, or if we're dealing with altcoins, to accumulate the altcoin at a low price. A lot of people don't know when to buy altcoins. They know that the altcoins are going to go up, and they don't know when to buy. They know they should buy the dip, but they don't know where the dip is. Well, Market Cipher B tells us we came down to our weekly level. We know it's a weekly level, so we know it's a very, very strong support. A very strong support. We see that we hit a bottom here, and we see that momentum is eventually going to start moving in our favor, so this is where we would accumulate. So I hope this makes sense, guys, the top-down analysis. So a few key things to remember. Okay, make sure to color code your support and resistance lines for each time frame. It's very important because it's so easy to not color code your lines, and then you forget, was this a daily level? Was it a 4-hour level? Was it a 2-hour level? It's important that you can just look at your chart and know what time frame the support or resistance was drawn on, because that will help you make a decision as to whether or not you should enter a trade. If price is coming down to a 1-minute support level, right, you should not be expecting the same bounce that you would expect off a weekly support level. Second thing, guys, higher time frames provide more significant support and resistance levels, right? This is what I was just saying. The higher the time frame, the more significant of a reaction you can expect when price gets to that level. If it's a resistance, you can expect a really nice rejection. It could offer a really good shorting opportunity. If it's a support, you can expect a really nice bounce, a really good longing opportunity. And how do you know for sure it's going to bounce and reject, or it's going to? How do you know if it's going to reject or bounce? You look down at Market Cipher, and that will tell you. Always look for a reaction when price comes near to a support or resistance level. Okay, these support or resistance levels, they give us orientation. They give us guidance. It's our map. It's our map to map out where we are in the price action. If we take these lines away, okay, we have no point of reference. And I even take the grid lines off my chart. A lot of people, they keep the grid lines on. I don't even use the grid lines, but we really have no point of reference right here. We're just looking at candles on a chart. We don't know if there's a significant level. We have no idea. That's why we need to map out our market structure. Fourth thing to remember, guys, always use Market Cipher to determine how to trade the support and resistance levels. Okay, if we're trading with Market Cipher here, because this is going to tell us how to enter trades when we come to these significant levels. Okay, I was going to do 3 examples, guys: Bitcoin, Ethereum, and EOS. I did 2 examples: Bitcoin and Cardano. So we're going to change a plan here. All right, dynamic support and resistance, moving averages. Okay, these are super important, and if you're new to trading and you don't know what moving averages are, I think you're really going to enjoy this information. This is where things get juicy and exciting. Okay, I'm very excited right now. So a moving average is an indicator that is commonly used in technical analysis. The reason for calculating the moving average of an asset is to help smooth out the price data over a specified period of time by creating a constantly updated average price. A simple moving average is a calculation that takes the arithmetic mean of a given set of prices over the specific number of days in the past. For example, over the previous 15, 30, 100, or 200 days. Now, it says days here. This is the definition of a simple moving average, but it's really based on the period of time that your chart time frame is on. So if you're on a 15-minute time frame and you're using a 15 simple moving average, it's basically going to give you the average price of the last 15-minute candlesticks. If you're on the 1-minute time frame and you're using a 15 simple moving average, it's going to give you the mean of the last 15 candlesticks. It's just averaging out the price. And it's pretty nice because when we actually put this on a chart, I'm just going to go to indicators up here and I'm going to type in MA and I'm going to click moving average. And it basically gives us a nice average, and we can use it. We can use these as dynamic support and resistance levels. They really will be able to help us enter and exit trades. I'll get into that more. But this is what a moving average looks like if you are completely new. If you ever see people with, and they have a chart and they're doing technical analysis, and you see these lines here, they're moving averages. There's a lot of things we can do with them. Now, an exponential moving average, an EMA, is an exponential moving average. It's a weighted average that gives greater importance to the price of a stock, or in our case, cryptocurrency, on more recent days, or we could say more recent candlesticks, making an indicator that is more responsive to new information. So an EMA, an exponential moving average, is different than a simple moving average. Let me delete this simple moving average here and put on an exponential moving average. Here's an exponential moving average. Now, the difference between the EMA, and actually let me change the color so that you guys can see the difference here. I'm going to make the EMA gold, because if you use EMAs, you're going to be golden. You are going to be golden. We'll use a regular moving average. We'll keep it blue. Look at the difference here. They're both set to the same range, which is 9 candlesticks, an average of 9 candlesticks. But the gold one is different than the blue one because the gold one is giving more priority to the most recent candlesticks. So it's giving less priority to the older candlesticks and more to the most recent candlesticks. Now, I prefer to use EMAs for trading cryptocurrencies. I find that exponential moving averages are much more useful and much more reliable than simple moving averages. Now, let me just make a quick side note here, guys. A lot of this is subjective, okay? I have taken a lot of trading courses where people talk about moving averages, and everybody has their own preferences. Obviously, I'm going to go over my preferences. I'm going to tell you why I like what I like. But just make a note to yourself that this is something that you should experiment with. This is something that you should test out and try out. The more you get into moving averages, try out different things, see what you like, see what works for you, see what you can discover. There are so many things you can do with moving averages. So here's some cool things about exponential moving averages. They act as dynamic support and resistance levels. Now, when we were drawing out our lines of support and resistance, they were horizontal lines. Let's get back to BTC. Okay, and let me turn off these moving averages. These are horizontal lines. They're static. And the reason they're static is because the reason they are static is because they're not moving. Those levels are going to stay here no matter what happens to the price. If I turn on a moving average, and let me turn off all these ribbons here, because let me just show one of them. Moving averages will act as dynamic support and resistance, and the reason they're dynamic is because they will move with the price. Now look at how this moving average is acting as support and resistance. Let me make it a little bit thicker for us here. A nice thick moving average. Boom. Yeah, let's make it thick here too. Oh wait, is that the wrong one? Yeah, wrong one, sorry. Boom. Nice and thick. And let me actually make it blue and white for us. Oops, sorry guys, I keep clicking the wrong buttons here. I'm going to make it blue and white so it's easier to see. Look at how this moving average is acting as dynamic support and resistance. Every time we come down and touch this moving average, what happens? We get a nice bounce off of it. Bounce, 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 bounce. And contrarily, whenever we drop under the moving average and we try and come up and cross above it, it acts as resistance. We get a rejection. We get a rejection. We get a rejection here. And then we cross back up above it and we get a bounce. We get a bounce. We get a bounce. We get a bounce. Right? This is dynamic support and resistance, and it's very important because this also will kind of help us find good places to enter trades. Whenever price comes down to an exponential moving average, we can expect a significant reaction to happen. I'm going to get into more about what length exponential moving averages we should use, because obviously, you guys can experiment and do what you want, but I find that using the Fibonacci number exponential moving averages offer extremely powerful levels of support and resistance that we can even use as entry and exit indicators. We can use them as stop losses, we can use them as entry points, right? I mean, look at this. Just by looking at this moving average without even knowing much about them, you could say, okay, if we're in an uptrend, I'm just going to buy every time we come down and hit this moving average. I'm just going to buy every time we do. Every time. I'm just going to buy here, right? And you would have been right every single time. And look at this too, guys. Look at how when we had this FOMO wick back here, whether or not it was F2 pool, I don't know. Everyone has a different theory on this crazy wick. But look at where the wick came to. Basically the moving average. Basically the moving average. It's really cool how these moving averages work. So they act as dynamic support and resistance. They can act as buy and sell signals as well. Obviously, I just showed you how you could have bought on every single bounce. But again, if we're just looking at when price action crosses over and under these exponential moving averages, we can kind of see that as a buy and a sell signal, right? Like if we see price coming up above the moving average from below it, like right here, price was coming down below the moving average. Then when it crosses back up the moving average, we could see this as a buy signal. Then it crosses below the moving average. We could see this as a sell signal. And again, those would have been really nice entries, right? We cross over right here and just ride it up. And then we crossed under right here and we just short it right down. And then we cross over again right around here and we just go long all the way up. So these are really cool. And some people trade only using moving averages. Only just using moving averages and maybe some support and resistance levels. And you can have a lot of success with that. But our goal here is to take a whole bunch of different tools, layer them all together, and if we have like 4 or 5 tools that we are using at our disposal, and we combine them together, we can find the perfect entries for trades. We can know exactly when to go long, exactly when to go short. Another thing moving averages do, guys, is they act as bull and bear trend indicators. Okay, so obviously when the moving average is angled upward like this, we're in a bull trend. When it's angled downward like this, we're in a bear trend. Now, the moving average I'm looking at right now is part of Market Cipher A. I'm going to get into this more later, but there's a really nice feature about the moving averages in Market Cipher A, which is the fact that they change color as added confirmation. So if we zoom in here, we can see that there's 2 colors. There's blue and white, right? Blue and white. And the blue indicates that there's enough data that shows that we are officially confirmed over the moving average. Okay, so this will change color when we are officially confirmed over the moving average, which is really nice, because if you look in the past, you might have thought that this was a confirmation over the moving average if it was just one color, but we dipped back under. You might have thought that this was confirmation over the moving average, but we came back down. Right here, this is the official confirmation over the moving average, okay? So this will help us not jump the gun right here. This will help us not jump the gun. Of course, it's not perfect, guys. It's not perfect, and that's why we need to layer our tools together, because you see right here that the moving average changed from white to blue, and you might have thought, oh, let's go long, but nope, we come down. So it helps. It's a layer of help, and in this entire course, we're going to be focusing on Confluence, meaning we're going to be looking at multiple indicators, multiple things on the chart, and we're going to make sure that they all agree. And when they all agree, that's when we are going to take action. Now, let me show you what I mean by that. Look at this right here. I want to show you guys something. We have a weekly support and resistance level right here. This yellow line is a weekly support and resistance, a very significant resistance level, right? An extremely significant resistance level, right? Because this was all the way back in January, this was a major resistance, then it was a major support, then it was a major resistance again, and we couldn't break through. We even tried to break through, but it was a fake out. But look at what happens right here. Let's zoom in. This is really important. This is extremely important. And I really think this is going to help a lot of people who are new to trading understand where to find those really good entries. What do we see right here? We see that price comes up above this moving average, this exponential moving average, and the moving average confirms bullish because it turns from white to blue. Now, your Market Cipher A is going to probably have a different color than mine. I just want to make them white and blue so that we can see them more clearly. So we have a confirmation over the moving average, and we have a 4-hour candle close above the moving average. I mean, this was an Elon Musk Twitter change, but if we ignore Elon Musk, we can clearly see that we would have still kind of been in the same trajectory, right? He just kind of gave us this little fake out thing here, but pretend that those candles don't exist, cut them off right here, and we kind of just kind of came right up through that. So we had a confirmation above this weekly resistance, above this moving average, so that's called Confluence. We came to 2 specific key points, the moving average and the weekly resistance, and we confirmed a candle above that. We closed the candle above that. So that's extremely significant, extremely significant. So we can kind of get a really good idea that things are starting to turn from bearish to bullish. Then what we would do is we would look at Market Cipher, and we would try and find a great entry using Market Cipher. And of course, what do we see on Market Cipher? We see an anchor wave with the money flow in the red. We see a trigger wave with the money flow in the red. And then we see this beautiful curvature upward where the money flow curves from the red into the green, and we get this nice trigger wave right here where the money flow is officially in the green. As soon as we get this green trigger wave where money flows in the green, we've already confirmed over this major resistance. We've already retested this major resistance. And now we are confirmed above the resistance, above the moving average, and Market Cipher B is telling us money is coming back into the asset and momentum is moving in our favor. And so those are 3 things, 3 areas of confluence, 3 different indications that are telling us go long. And these are the things that we're going to be looking for. And I'm going to get more into that later, but I want to talk more about moving averages because there's a lot of things we can do with this, and I want to make sure you guys have a lot of tools in your toolkit to kind of play around with different things and find out what works best for you. You heard me mention the Fibonacci numbers, how I like the Fibonacci number moving averages. There is a popular trading strategy out there that a lot of people use, or some kind of variation of this, where basically people will put 2 or more moving averages on a chart, and they will go long when they cross on top of one another, and they will go short when they cross below one another. And this is typically referred to as the blue, green, yellow, red strategy, okay? The blue, green, yellow, red strategy. And what we're going to be doing... Whoa, what happened? Here we go. What we are going to be doing, guys, is we are actually going to be looking at 4 exponential moving averages and just playing around with them, looking at what kind of entries we can get. Now, the reason it's called blue, green, yellow, red is because those are the typical colors that are assigned to these 3 exponential moving averages, and these are Fibonacci numbers. Now, if anybody is unfamiliar with Fibonacci numbers, you can Google the guy Fibonacci who came up with this, some kind of mathematical formula that's found everywhere in the creation. Everywhere in the creation, you see this pattern, and basically, you're taking one number and then the second number, adding them together and getting the third number. So it would be 1, and then 2, and then 1 plus 2 is 3, and then 2 plus 3 is 5, and then 5 plus 3 is 8, and then 8 plus 5 is 13, and then 8 plus 13 is 21, and then 13 plus 21 is 55, and it keeps going on and on like that. You're basically taking the 2 previous numbers, like 8 and 13, adding them together, and that's how you get your next number. So the ones I like to use are the 8, the 13, the 21, and the 55. Those are Fibonacci numbers. The thing is about the Fibonacci numbers, guys, for some reason, and some people say it's market psychology. I don't know what causes it, but these numbers are very significant when it comes to trading. That's why we do the Fibonacci retracement poll, and we'll get into that later. But you will find that these numbers, 5, 8, 13, 21, 55, and then 76, these will you'll just find that price will come down to these levels. That's all I can say. That's all I can say. So let's put some of these on the chart. Let's remove our market cipher A. And I'm just going to go ahead and put 4 exponential moving averages on, guys. So let's see. I should have them starred here. Moving average exponential. Here we go. And guys, if you want to put 4 on, you don't have to go into indicators every time. You just click this 4 times. Let me just delete my other indicators here because I can only have, I think, 5 on my chart at the same time. So let's go to moving average exponential and click it 4 times. 1, 2, 3, 4. And then we're just going to set our color. See, not market cipher. TradingView will automatically make it blue, green, yellow, and purple, but I think it might have used to make it red. So I'm going to do blue, and we're going to set it to 8. I'm going to do green, and we're going to set it to 13. You're going to set the length to 13, guys. The length simply just means the number of candlesticks that you want it to average out. So we're going to do 8, 13. We're going to do 21, 21, and then we're going to do 55. And I'm going to change the purple to red just because that's kind of what I'm used to, right? Let's change it to red. And so basically, guys, the idea with these moving averages is whenever they all cross and you have blue, green, yellow, red on top of each other like that, this would be your long signal, okay? Look, right here we have the cross. Blue, green, yellow, red. And you can even kind of tell when they're going to cross, right? The blue, green, yellow, red strategy, a lot of people use this for buy and sell signals. Now check this out. Just check it out. Look at how price tends to, when we get these wicks, come down to one of these numbers. Right down to the 8, right down to the 13, right down to the 21, right down to the 8, right? It's not always perfect, but a lot of times we'll see price come down to one of these levels. Now, something else that's really cool is look at what happens when we see that pattern, blue, green, yellow, red. It usually means we're heading into an uptrend. It usually is a long signal. Now, when we get these moving average crossovers, the blue, green, yellow, red, it's a long signal. If we find confluence with market cipher, right? Which we kind of do right here. We have a nice bottom, and then we have two trigger waves right in a row right here. As soon as we get this second trigger wave, as soon as money flow crosses over into the green, we see it clearly crossing over. What happens? We get this confirmation, a candlestick closing above this weekly support, this weekly resistance, and we also have blue, green, yellow, red at the same time. Again, we have all this confluence is telling us to enter a trade. Now, if we ever see the opposite, red, green, yellow, blue, now that means we should go short. That means we should go short. Now, the cool thing is, red, yellow, green, blue. Red, yellow, green, blue. So right here, we can kind of see red, yellow, green, blue, and this would have been our short entry right here, and that would have been a really nice entry. Just going off these moving averages alone, that's a really nice entry, a nice 15% move. Now, look at this confluence, guys. We have this really nice daily support level. We came down, we were crashing. We came up, we bounced all the way up to this key daily resistance level, and we rejected off of it. So we have all these confluences to tell us to go short. We're coming to a key daily resistance level. Market Cipher has just given us this crazy bearish divergence, okay, where price was going up like this, and Market Cipher B was ticking down like this. We just had this huge crash, so you could see this would have been our anchor wave up here, and then right here, this would have been a red trigger wave. And we got the red trigger wave, we got the rejection off the daily resistance level, and we got the red, yellow, green, blue moving average crossover all at the same time, giving us all this confluence to enter short in this position. And guys, this is something that can work in multiple time frames. Now, I'm not trying to oversimplify things here, guys. Obviously, I prefer to trade on the larger time frames. The larger time frame you're trading on, the more reliable, the more accurate these signals are going to be. And the reason for that is because they're based on more data. The more data you can fit into these lines, the more data you can fit into Market Cipher B, into these candlesticks, things are going to smooth out. You're going to have more reliable signals. Remember, the chart is literally just a printout, if you will, of a whole bunch of numbers. A printout of a whole bunch of numbers. The more we zoom out, the more clearly we can see the picture. It's just like anything else, right? If you're in an airplane, you can see what's happening on the ground from a bird's eye view, and you can more clearly see the patterns of the landscape and the mountains and the valleys and the rivers and stuff. The more you zoom out, the better you can see those things. It's the same with a chart. So on the higher time frames, these things are going to be much more reliable. But they're very reliable. They're very reliable. The blue, green, yellow, red is very reliable. Mix that with your levels of support and resistance, and you're golden. I mean, look at this right here, guys. Look at this. Right? Boom. Right in this area. Right in this area. We have so much confluence. We have Market Cipher B printing a nice, fat, juicy anchor, a nice, fat, juicy trigger. Money flow still in the red. As soon as we get this juicy trigger with money flow in the green, we get all these things happening at the same time. We're coming over a key weekly resistance level. Okay? We get the blue, green, yellow, red going, and we're off to the races. We're off to the races. And look at what happens right here. We come down, and it's like, what is happening right here at this key weekly level of resistance? Right? We're consolidating here. If we didn't have these moving averages, if we did not have this level of weekly resistance to know that this was a key significant level, we'd be totally lost. But we see these things happening. We see the blue, green, yellow, red starting to form again as soon as we come off of this resistance level, right? We actually see it happening right in this candle right here. We see a nice green trigger wave on Market Cipher B. And we have those three things telling us, go long here, go long here. Now, I'm going to be answering questions about this later, but the moving averages are something that you guys can experiment with. I recommend you experiment with the Fibonacci levels. Something I also like to do, guys, is let's say you're analyzing a new asset that you've never really analyzed before, like Link USD, for example. Let's say that you want to start trading Link, and you are looking at the chart and you're saying, okay, I notice that blue, green, yellow, red, yeah, that's all fine and good, but I'm noticing that when we're getting these lows, they're not touching the blue, green, yellow, or red. We're wicking down to these lows, and these seem to be really good buy entries, but I don't see them lining up with any kind of moving average. This is where you're going to start to experiment, guys. This is where you are going to take this 55 moving average and just adjust it and see what level is price getting to. What Fibonacci moving average level is price getting to? Is it 69? I mean, well, you could stick to Fibonacci levels, or you could just do random level. Let's just do random levels. Let's see 69. Okay, 69 seems to be pretty nice because these wicks are coming down and touching the 69, but not quite all of them. So let's make it a little bit longer in length. Let's make it maybe 76, which is a Fibonacci number. 76 is a Fibonacci number. And yeah, you know what? We could say, okay, maybe we're going to use the 76 moving average here to find some nice buys, some nice buy entries, because we can kind of tell whenever we have these long wicks down, we're generally coming down to this 76 Fibonacci support, this exponential moving average, which is now acting as our support. And so we're going to look at what happened in the past and kind of come up with a plan for the future, right? Maybe 76, we don't like that. Maybe we want to make it a little bit longer, make it like, 83. Let's just try 83 here. Makes it a little bit longer. And yeah, maybe we want to go with 83. So then what we would do in the future is, like right now, price has come down to this 83 moving average, right? So how would we trade this? Let's see if we would actually trade this. Well, do we have blue, green, yellow, red going on? Not really. Money flow is in the green, so it looks like money flow is curving back down. So maybe we wouldn't want to trade this. Maybe we would want to wait until we got a nice green trigger wave printing here, which looks like it's going to happen soon. You would also want to mark out your support and resistance levels to come up with a plan for that. But as you're looking at these various coin pairs, do your top-down analysis, put on your moving averages. And here's the thing, guys. We're not trading Bitcoin every day, right? We're just not trading Bitcoin every day. It's not something that everyone does. Sometimes, especially for me, I don't trade every day because there's not always a trade opportunity. There happened to be one yesterday morning. There happened to be one today. But you can go days without getting a trading opportunity on the 4-hour chart, and I primarily trade the 4-hour. So go to some other pairs. Go to some other random pairs. If you have a Binance account, if you have a KuCoin account, go to some random pairs, do your top-down analysis, put on some moving averages, and see if you can find any good entries. Now again, the key here, guys, and I'm going to keep harping on this for the entirety of the course, is confluence. You want to find agreement between your moving averages, between your support and resistance levels, and between market cipher. These key things are going to totally change the game for you if you actually stick to following those rules of waiting for confluence. You're pretty much guaranteed to be profitable because these lines on the chart are interpreting the data for us. They're telling us what direction price is moving. Market cipher B is telling us where the money is coming and going. It's telling us the momentum. It's telling us what is happening in the market. These are giving us very clear indications of what we can expect to happen. Is it going to happen the way you want every single time? No. A clear example of that is today, where right here. Let me zoom in a little bit. I had some different levels marked on here on lower time frames, but basically we were at what I would consider a support, and it was support, and then it got flipped into resistance, and then it got flipped into support again. We printed this green trigger wave right here after hitting a nice bottom, and I thought, okay, let me go long. I went long right here. It turned out to be okay for me. It turned out to be pretty good, but at first it wasn't good. At first, like I said before we started the live stream, I entered long. I was at a midwife appointment with my wife because we're having a baby, and I entered long for my cell phone, which is always a dumb idea. I always tell myself, don't ever trade on your phone. Whatever, I did it anyway. I check it when we get into the car. I'm like, man, that was a stupid entry. Of course, I've been in this long since like 52.2, and I've just been taking profits out and then finding good entries along the way. And admittedly, I missed a really nice entry this morning, but I'm getting off topic. So, it didn't turn out the way I wanted, but it eventually turned out the way I wanted, and I had some really nice confluence. Even though it wasn't the best of confluence, we still had blue, green, yellow, red. We still were bouncing off of this nice support level right here, this nice support level. We got a really nice bounce off of that. And I had those three things in my favor, and it turned out that they actually were in my favor. Things actually did turn out the way I wanted. I'm in more profit now than I was when I entered that trade. So it looks like now we're forming a red trigger wave on 24 minute. So going to be having a little pullback, and hopefully, guys, if you're looking to enter here, because we do have that momentum on the 4-hour. We have this upward momentum on the 4-hour. I would be waiting for money flow to come down and then to cross into the blue. If we can get money flow back into the green and we can print a nice trigger wave right here, and if we bounce off of this support again, that would be a great entry. Or even if we bounce off of this support down here, that would be a great entry. It's all about finding confluence. So experiment with moving averages, guys. Experiment with the Fibonacci numbers. You can Google Fibonacci numbers and get a whole bunch of cool stuff. So let me close these out, and I want to discuss a little bit the Market Cipher A EMA ribbon. Okay, just talk about the features of the ribbon, how to use the ribbon, and then we'll do questions and answers. But Market Cipher A comes stock with this really nice exponential moving average ribbon. All of those moving averages on Market Cipher A are exponential moving averages. The problem is we don't really know what they are. You have to figure it out for yourself, and the way you figure it out is it's kind of a pain, but it's worth it because Market Cipher A will change color, which gives you that awesome confirmation. So if you can do blue, green, yellow, red with the Market Cipher A ribbons, man, that would be some nice confluence right there. So the way you figure out what EMA each ribbon is you have to turn each one on individually. So right now I only have ribbon 3 on, okay? I'm going to turn on ribbon 5 because I already know which one this is. And then what you're going to do is you're going to go to indicators and you're going to go to exponential moving average. And you're going to have to basically tune that thing until it lines up perfectly with the Market Cipher A. So I know this is the 21 moving average. So if I set the length to 21, you'll see it just kind of disappears, right? Because it's overlaid over the Market Cipher A moving average. So that's kind of how you're going to have to figure out which is which. But I want to talk about some of the features of this Market Cipher A ribbon because it's actually really, really powerful. And I'm going to turn them all on right now. I'm going to turn them all on. And EMA ribbons are basically, you can think of this as an over-the-top blue, green, yellow, red, like as a way, 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 way over-the-top blue, green, yellow, red, right? Whenever these things cross above each other, like right here, right, and they go from all being gray to all being white, this would be your long signal. This would be your long signal. And contrarily, I say, if they cross under each other and they all turn gray, then that would be a short signal, all right? So you would have entered short right here. Now, I'm sure right away you guys noticed something, which is, man, this is a very delayed indicator because we got our long signal right here on Market Cipher A to go long, but we didn't get our long signal on the EMA ribbon until right here. And you're right. You're absolutely right. We had a nice bounce off of this 4-hour support right down here, and we also printed a nice green trigger wave right here. And actually, I wouldn't necessarily call it a trigger wave, but yeah, I would still call this a trigger wave because we had our bottom here, and then we printed consecutively higher waves, and we had a trigger wave come down below the 0 line. So really, you would have entered like after this bounce, right? But these indicators, this EMA ribbon was a little bit delayed. So this is something to keep into account when we're dealing with moving averages, that sometimes they're a little bit delayed in their signals. So what we can do is we can kind of look at them and kind of extrapolate what's happening. If you notice, you can kind of tell what's happening with these moving averages. You can tell that they're starting to move back up, right? And so if you're getting confluence, you're like, okay, look, I know we got this bounce off of the 4-hour support. We printed a nice tight trigger wave on Market Cipher B, and I can kind of see now these moving averages kind of crossing back up. Maybe that would be a good time to look for an entry. But personally, I don't use this ribbon at all when I'm trading. What I like to do is I'd like to use 1, maybe 2 moving averages, and I use them as my signals. I don't even use blue, green, yellow, red most of the time. I would use probably ribbon 5, definitely always ribbon 5, that 21 EMA. And then maybe I would use like ribbon 7, turn the rest of these off here. And really, if you take a look at this, this is much nicer and cleaner, right? When we have the cross right here, it's a much crisper signal. It's a much crisper signal, only having one or two of these things. And so I would kind of recommend just using one or two, and use them not only for the buy and sell signals, guys, but remember what we talked about up here. Where are they? Yes. Use them as dynamic support and resistance levels. Okay, so don't just look at the fact that two moving averages are crossing over each other. Look and see, did we get a bounce off these moving averages? You can use them as buy and sell signals, right? We come up above the moving average right here, and as soon as it turns from gray to white and we print this green trigger wave, off to the races. Use them to identify if we're in a trend or not, right? So if the moving average on market cipher A is white and we come down and we touch it and it's white and we bounce off of it, that's a great long position. And that's a great long position. And what we're going to do with all this information, I know I've already talked on this, but I really want to hammer it in, is look for confluence. Look for confluence. Look for things to agree with each other. Look at this. Look at what just happened here, guys. Look at what just happened here. We're getting a bounce off the 21 EMA. Do you see how perfect that is? Look at that. We had a candle come down, it wicked, came back up, and now we're getting a nice bounce off that 21 EMA. This stuff works. This stuff works. Now I would not long this. I would not long this because we're getting downward momentum. But as the price ebbs and flows, when we come to these levels, it's inevitable that we're going to have a reaction. It might be a short reaction, right? Like clearly we're still going to come down. It looks like it, right? In fact, we might come down to test this last level of really key support and resistance. But there was still a reaction there. There was still a nice little bounce there. And look at what happened. We bounced off the 21 EMA. We come up perfectly to this 4-hour resistance right here. This perfectly off the dynamic support to the static resistance. And then look at this. We wick down and touch this second Fibonacci exponential moving average and get another little bounce off that. It's crazy how this stuff works. So if you study this stuff, you can really start to predict where price is going to stop, where price is going to go. It's really cool. Now, obviously, in hindsight, it's always easier to see what happened, right? It's always easy to look at the chart and say, oh, look, it respected the resistance here, the support here, the trend line here. But you'll start to get the hang of how price just kind of breathes, right? Now, what we're going to be looking for when we're looking to enter trades on any time frame is, well, right now we're only dealing with support, resistance, and moving averages, but we're going to be looking for places where price comes down and it touches a combination of things. Right here, it's touching both the moving averages and the support. If this happens, get very interested in a trade. We know we're in an uptrend because the market cipher A moving averages are white. And then we print this nice trigger wave right here. It's a trigger wave because we can see clearly money flow coming into the asset. We see the momentum moving up in our favor. That would have been a great long entry right here. You could have ridden that thing up all the way to this weekly resistance level, right? And that would have been a really nice move right there. That actually would have been a nice, let's see if you probably wouldn't have gotten out until this candle started to go down. And you got this red dot, this bearish divergence going on, like a 3%, a nice 3% gain, And if that's 5x leverage, 3x leverage, 2x leverage, that's a really nice gain. Even zero leverage, that's a nice gain. So we want to focus on finding confluence. So what I want you guys to do is I want you to do this to your charts. Experiment with moving averages, do the top-down analysis, go back in time, and look at what happened when price gets to these key levels. Just look at what happens when price comes to a support, and at the same time there's action happening with the moving averages. Look at what was happening on market cipher B, because the more you study this stuff, the more you're going to find patterns and say, okay, I know that when market cipher B is printing one of these bottoms, these big bottoms, and the money flow is coming into the red, if I see the moving average turn from gray to white, and if I see us come and confirm a candle close over this resistance, and I also see money flow clearly crossing, turning from red to green, I know historically we're going to get a nice bounce here. And then you start to notice these things, and as you're looking at charts, you will make the Sorry about that, guy. I forgot to turn off my iMessage here, so I just got a text. You'll be able to see these patterns and really pick up on them. And this is really going to help you enter trades. And so for the next few weeks, we're just going to be building upon these things. We're going to be building upon these types of Confluence, right? We're going to be talking about Fibonacci. We're going to be talking about how to obtain targets. We're going to be talking about stop losses, take profit levels, and all of it revolves around moving averages, support and resistance levels, and market cipher B. And now it's like we're making a really nice $500 layer cake, right, from one of those expensive bakeries. We got our nice cake foundation, and now we're just going to be putting the fondant up on there and the icing and those decorative flowers on there and some candles or whatever you do at cakes. I don't even know. I don't even eat cake, but I used to, and I used to like it a lot, and I probably still would if I had some. But that's what we're going to be doing from here on out. So let's open up the floor for questions and answers. I am going to get to the Discord here. Let me just make sure the stream is still running. Dang. We're getting some lag. That is not cool, guys. That is really not cool. Let's come into the Discord here. All right, guys. Do we have any questions in here? Let's see. This is a... Okay, let's go back to the beginning here. Oh, Clint hates red and green too. Cool, I'm not the only one. Yes, I agree, frequent flyer. They're Christmas colors, which is very stressful. Yes, indeed, Christmas can be extremely stressful. I like the mint and purple, Clint. You know, maybe I should do mint and brown, like mint chocolate chip ice cream. Okay. I'm sorry about the lag, guys. Oh no. Okay. I might have to redo this. I might have to redo this whole stream, guys. All right, so if anyone has any questions, let me know in this chat. Guys, do I have to redo this whole stream? It was bad at first, but it got a little bit better. Okay, I'm going to answer these questions, but guys, just let me know, like, am I going to have to redo this? Because I just want to make sure that the people who are expecting the recording will be able to actually follow along. Let me know, and then I will start answering these questions. Okay. Okay, great. Thank you, guys. Okay. When you set your stop loss under the 21 moving average, which time frame do you use? Asks Moondream. That's a great question, Moondream. And it really depends on what time frame you're primarily trading off of and how long you expect to be in that trade. So if, like for me, if I'm trading my 424 strategy and I'm looking to ride these super long waves up, I will honestly set my stop loss below the 21 EMA on the 4 hour, okay? Below my 21 EMA on the 4 hour. And really, when I got in right on this candlestick right in here, my stop loss was down under here, and now I moved it down under here, and then I moved it down under here. And so basically, if we break out of this pattern right here, this upward wedge, if we break down out of here, my stop loss will get hit. Because I'm looking to ride this thing all the way up, hopefully to like at least 62K. My stop loss stays here. Now, if you're entering a scalp, right, on a lower time frame, use the lower time frame, right? Because if you're looking to get a move like this right here, that's a 7% move, and you're looking to get in and out. Just keep your stop loss under this EMA, because here's the thing about the EMAs, guys. You can be pretty sure that if price really crosses under these things, that it's time to get out of the trade anyway, and that's true right here. You would have gotten stopped out here. You might have felt bad that we came back up, but we came back up and tested the same resistance and then came back down. So it depends on what time frame you're primarily looking to trade off of. Longer term time frames, if you're looking to hold that trade overnight and multiple days, put your stop loss on the higher time frame. Shorter time frames, put your stop loss on the shorter time frame. And we're going to get into leverage more later, but this is why it's so important not to over leverage those long-term trades, because you're going to need a lot of playroom, right? I mean, you know, a 3% loss under this 24-minute EMA is much different than putting your stop loss right now. If my stop loss gets hit right now, you know, that is like a 6% loss, which, you know, if you're leveraging 10x leverage, that's a 60% loss. So that's why you want to be really careful. Make sure you have a lot of playing room when you're doing those longer term trades. Let's see what else we got. Can you have too many support and resistance lines, frequent flyer? Yes, you can. And what I like to do when I'm doing my top-down analysis is I like to start with the ones obviously on the higher time frame, and then when I zoom down to where I'm actually trading, I might take some of them off. Really, it doesn't matter how many you have as long as you know that those are very important levels. So sometimes people get a little carried away. Like if I'm trading on the 24-minute, I wouldn't put one like right here because, you know, you could say, yeah, we had candles touching here, we had candles touching right here as well, we had candles touching right here as well, and you can get carried away with that, and then it just makes your chart sloppy. But if you just have a few and you know that they're important, even if you have many, but you know that they're important levels, it's okay because they all give you reference points. It starts to become excessive when you're putting them pretty much everywhere, because we have to remember that these levels, we want them to go to the left. We want to be able to see these levels in the past, not just where we're trading. So, you know, if I'm putting a level right here, you know, in the past, I don't really see much price action right in this area. It's kind of a blank area. So make sure that it doesn't matter how many you put, make sure you know what time frame they're on. Make sure you're seeing that same level somewhere to the left of the chart, and you'll be okay. Is there a way to easily copy and paste support resistance levels from one saved chart to another? Unfortunately, no. But what you can do is you can just save your chart setup by clicking this up here. And if you have the type of TradingView account where you can have multiple charts at the same time, what you can do is, like, I have my 4-hour, my 24-minute pulled up right here, and if I'm moving my cursor on the 24-hour, I can see exactly where that is on the 24-minute. So if I want to copy my 4-hour support and resistance, if I want to copy my 24-minute support and resistance levels over to my 4-hour chart, I can just make sure that I'm lining up the dotted line with the support and resistance level, and then make it right here. And then I would put, you know, the other one right here, and so on and so forth. And it's pretty cool to see on the 4-hour chart how close and crowded these things can be. That's why a lot of times when I'm posting in the Discord about my trades, I have all these crazy lines right next to each other. It's because on the 24-minute it doesn't look that crazy, but on the 4-hour, you know, it looks really sloppy. So I like to keep them on both charts at the same time, because it helps me find, you know, reference points between chart to chart, which I think is really important to see the big picture and the little picture at the same time. Okay, let's see. Okay, Frequent Flyer, thank you for your humble opinion, and Ed and Clint, appreciate your guys's, and Diver72, appreciate the feedback, guys. Appreciate the feedback, y'all. Any more questions? I know this stuff is pretty straightforward. It's exciting stuff too. I am a big fan of this kind. I get stoked about these things. I get stoked. In case you guys couldn't tell, if you couldn't tell the passion in my voice. Okay. If we don't have any more questions, guys, we are going to end the stream. I'm going to check the YouTube real quick just to see what's going on. Okay, thank you guys for your comments in here. Thank you, guys. Thank you. Let's see. Springboard is typing. So we're gonna stay on here a little bit longer. It's 3:13. see what Bitcoin is doing right now. Man, Bitcoin, disappointing me today. Disappointing me today. I thought today could be the day to hit a new all-time high. Perhaps it will be, guys. Perhaps it will be. I'm keeping my eye on this 24-minute chart. Maybe we're past the point. Maybe we're just past the point. But I have to be honest with you guys. I did take some profits up here on my cell phone while we were doing this live stream. So I'm not too upset that we're coming down. I did make a nice little move today, so I'm satisfied with that. Crypto Face, obviously a much better trader than me. He got in at the bottom, right in here, and I saw him go live, and I didn't FOMO in. I was actually at the gym when he was going live, and I hate trading when I'm at the gym because it makes me like lose the the adrenaline and all that. Let's see here. Okay, we got some questions here. Thank you, the world is gone. Do I ever use VPVR? Robit, what is VPVR? I'm not too sure. Why does Bybit match up with the red number while TradingView shows the value as a green number? It's because of are you using Hike and a She candles, P Kangaroo? It might be the Hike and a She. Okay. In Bybit, if you enter long position and after some time price moves up and market cipher shows a good wave coming, how can we add more chunk to our position and what will be the consequences? Is entry price become average between both entry? Okay, excuse me guys. Yeah, so basically your entry price will become an average, Diver 72, between all your entries. And the way you're going to do that in Bybit, right, is you are going to go to the conditional order, and you are going to, if you want to take profit out, you're going to go to a conditional order, and you can either do limit or market order. And if you want to take profit out, you would simply sell however many contracts you want to take out. So if you have $1,000 in the trade and you want to take out 10%, you would go to a conditional order and sell 100 contracts. If you want to add back into your trade, you would simply just go to your normal buy and sell, either market or limit, and just create a normal limit or market order. You don't have to go to conditional. And I mean, you could go to conditional as well. But yes, I would. I'm sorry. Yes, go to conditional. Go to conditional. Go to conditional. And do a buy or a sell order at those lower, at the lower place, at the lower price entry. Adding leverage is totally up to you, but basically, adding leverage will obviously give you more capital to trade with. So if you already have 100% of your account into a trade, you can add leverage so to have more money to put into a trade. But remember that will make your liquidation price closer. Okay. What are the days and times for these streams? I make babies. What's going on, man? I make babies as well. I'm glad we all make babies here. Hopefully we teach those babies how to trade. The days and times are Monday, Tuesday, Thursday, 2 p.m. Eastern Standard Time until 3:30 Eastern Standard Time. Yes, yeah. Crypto Clint, he has it. He has it good. 7 p.m. For some reason 2 p.m. is what works best for me, guys. What is EMA Ribbon 7? Water Skier wants to know. I don't know, Water Skier. We could find out. The way we find out is simply going and putting ribbon 7 on, and this is how you're going to have to find out all the ribbons, guys. So I'm going to put ribbon 7 on. Then I have to go to my moving average exponential and turn that thing on, and then I'm going to have to tune it. I'm going to have to go over here and let's see. Maybe it's a 50. Let's see. Nope, it's not a 50. Maybe it's a 30. Close, but maybe it's a 31 or a 29. It looks like it's a 29. Ribbon 7 is 29. You guys see how I did that there? That's how you're going to figure out. That's how you're going to have to figure them all out. MigZ, you may be covering this in another session, but can you tell us what Wolfpack ID tells us that is different from the money flow indicator in Market Cipher? I can do my best, MigZ. The thing is, I don't really know. I know people are trying to figure it out, and some people have some good ideas what it does. Personally, I don't know what it does. The way I found out about the Wolfpack indicator is back when I was trading Forex, and I know I talked about it this morning on my live stream. I got into the no-nonsense Forex method with VP. I'm going to plug his channel real quick because honestly, I really think that if you're trading crypto, this will help you a lot. Watching his videos, if you just Google search "no nonsense Forex," no nonsense Forex, right here. This guy's channel will help you immensely if you actually watch his videos and listen to what he says. But I found this indicator when I was trading Forex. I found it on some kind of forum, and I was using it as a secondary indicator, confirmation indicator to get me into trades. Now, when I started trading crypto, I started experimenting with some of those old indicators I was using for Forex, and I started to notice that it works really well. Now, we can just see the difference right here between money flow and Wolfpack ID. For example, money flow is changing from green right here, and the Wolfpack ID is not lining up with that. Like Wolfpack ID is showing us red below the zero line, while money flow is in the green right here. Okay, it's also not the same as the VWAP. A lot of people say it's the same as the VWAP. It's not. Look, VWAP is crossing over the zero line right here. Wolfpack ID is not. Same here. VWAP is crossing over the zero line. Wolfpack is not. Sometimes they line up, but a lot of times they don't. So I don't know what this thing does, but I do know that it works for getting you into good trades and keeping you out of bad trades. It's just like a safety net. Think of it as a safety net. It'll keep you out of some moves. But that's the thing. The reason we have these indicators, the reason we're looking for all this confluence, is not so that we can get into every single trade possible. It's primarily to keep us out of those bad trades and to make sure that the trades we do get into are going to be those profitable trades. You're not going to get every single move. For example, CryptoFace, he's a very experienced trader. He was able to enter this low right here this morning. And he said himself he didn't have all his indications. He said it was a high-risk trade. He was able to get all this profit because he didn't wait for the confirmations. He entered into a high-risk trade, but he's an experienced trader who can do stuff like that and get away with it because of his experience. But if you're new, you're going to want to wait for those confirmations because they're confirming to you that, yes, the price is actually going to go in the direction that you want. So I know I went off on a little tangent there. I'm sorry, y'all. Oh, trading volume. Yes, that's actually, I don't use that. I do not use that raw bit, but I have seen it and I have used it in the past, and I think it's actually really good for getting like nice points of control where you can tell where the most liquidity has happened on a chart. So it's really useful for showing you the level, like that red line in this picture here. If you guys see this red line, this is telling us where the most buying and selling happened. And actually, let me real quick pull that up on my chart here, because this is something that I wasn't planning on covering in the course, but I need to. Let me just cover it real quick. So, no, this is not what I want. I don't want the delta candles. Hang on. I don't think this is what I want. No, this is not what I want. This is telling me volume. This is telling me divergences within actual candlesticks. Fixed range. No, they're. What's the indicator that you're using there? Robit. Okay, water skier. Do you draw support and resistance every day? No, I don't draw them every day, but sometimes my charts get so sloppy that I just clear them off and start over. Clint says technically that the Wolfpack ID is an average directional index combined with a moving average. Cool. Thanks, Clint. You're a smart man. You're a smart man. Um, Migzy, can I do a comparison between regular candles and Hike and a She? Um, yes, I can. I'll probably do that in a YouTube live stream. But really, it's not. There's not too much difference. Like if I shut off this weird candle color thing, and we turn on Hike and a She, you can see it's not going to change. It's not going to change our support and resistance levels. It's not going to change those levels. For me, it just kind of clarifies those levels, right? Because you can see that it more cleanly shows those levels where the candlesticks open and close. When I put on Hike and a She, like right in this area, it's giving us an average. So even though the real candle's perfectly closed at this line, the Hike and a She is just showing us the wicks at this line. So you could say that somebody might draw their support and resistance levels a little bit different with the Hike and a She candles. But you have to remember that the Hike and a She candles are not giving you the actual price, right? Like this is not the actual open and close of the move, and it can get a little bit confusing. But this is something that's totally personal preference, completely personal preference. So it's something you should experiment with yourself. And I Make Baby says we win by not losing. That's absolutely true. Moondream says when you have a bad entry and start losing lots of money from start, but your liquidation is low, is it best to tough it out until the market swings back up when you see your money pouring out, or cut your losses with a stop loss and try to make it up later in a better trade? Great question, Moondream, and here's really my answer to that. It depends on the trade that you entered. Were you waiting for all your confirmations? And if yes, and you got all your confirmations, then I would wait it out, because you entered for a reason. You entered because you have a system that works for you. You've back tested it and you put in the work to know that it works, and you got your confirmations. So give your system that you spent your hard time and work and energy creating, give it the benefit of the doubt and let it play out, right? Let it play out. Guys, we're getting a green dot on the 6 hour right here. I feel like Bitcoin's just like gonna go up. That's how I feel. That's really how I feel. But anyway, if, however, you FOMO'd into a trade, or you looked real quick at the chart and you saw a green dot that wasn't confirmed, and you're like, I'm going in, and then money starts dumping out, then I would cut the losses, man. Then I would cut the losses. But it also depends on how long you plan to be in the trade. Are you trading on the 1 day time frame, right? Because if you're trading on the daily time frame, if we had gotten in at this green trigger wave right here, we would have seen money pouring out of our account. But we're only trading on the daily, and our confirmations told us, to go long, and we went long, and we're just waiting it out. But if you're trading on the 24-minute, that's a different story. If you're looking to stay in the trade long, stay in the trade long. If you're looking to come in and get out, cut your losses. To add more long positions, you can use any type of order. Oh, okay, thank you, Copcorn, for clarifying for Diver 72. Visible range, thank you, Robert. Visible range. Let's put that on. Show you what Robert is talking about. Here we go. So what this is doing, guys, visible range, is giving us the volume, okay, that actually is taking place at the price action. So it's telling us how many buy and sell orders. It's actually dividing it up into buy and sell orders that were placed, and it's telling us how much volume of trading actually happened at each one of these price areas. And this red line right here is giving us what people call a point of control, which is basically, and it'll change depending on how much you're zoomed in or zoomed out, is basically telling us where most of the liquidity was in the market. So we could draw then a nice little rectangular box around this area and use this as a nice little point of control. And the reason it's called a point of control is because this is really the area in which all this other price action is centered around, right? This is like the base point on which all the price action is centered around. And it's a really great indicator. You can actually use this as a support and resistance level as well. But the problem is, not the problem, but the thing you need to keep in mind is, depending on your resolution, this is going to change. So if you zoom into the chart, it's going to tell you where that coin to control is based on whatever candlesticks are visible in your chart. So if we go to the 4-hour, it's telling us, if we zoom out here, let's zoom out. It's telling us something very different than if we zoom in on the 24-minute, right? So just something to keep in mind. But it's a great indicator to play around with. And I have experimented a lot with it, but I find it just doesn't fit my personal trading strategy, which is totally fine. That's totally fine. Everybody needs to find indicators that work for them. Let's see if we have any other questions. Yeah, I make babies. Perhaps this is for another class. Any more questions, y'all? And then we're gonna have to end this. Man, it's really cool. Bitcoin is coming up to test this resistance one more time. I mean, eventually this girl's gonna have to go out with us. I mean, we asked her once, twice. This is the third time. Third time, they say, is a charm. We probably got a nice haircut. We probably got some nice new clothes at the mall. Probably got some nice, sweet-smelling cologne. With those pheromones. She's got to say yes now. She's got to say yeah now. We'll wait and see what happens. All right. When taking profits on the way up, then adding to your trade on the dips, like selling red dots and buying more on green dots, do you sell and add the same amount? For example, if you have 10K in a trade, you sell 200, then buy another 200. Well, here's the thing. I make babies. Yes, but when you take those 200 contracts, like if you have 1,000 contracts and you take 200 of those contracts out when you're like 10% in profit, that's going to be worth more. You're going to have more Bitcoin. Those 200 contracts are going to be worth more Bitcoin than when you started. So you can put more into that trade. Like if you make 10% and if you start out with $200, you make 10%, then you can take out $220. Then you can put $220 back into the trade at the lows. Robert, yeah, double top. Yeah, double top. So yeah, maybe we're heading down, guys. Maybe we're heading down. We'll have to wait and see what Market Cipher tells us. All right, guys, it's 3:31 Eastern Standard Time. I will, if anyone has any more questions, type them in. And if not, let us cut the stream with scissors. All right, y'all. It's been a good stream. I appreciate you guys for being here. Okay, we're getting one more guy typing in here. Nope, not typing anymore. Okay, it's been a good stream, guys. I'm going to end it here. Thank you for being here, and God bless all of you.